The opinions expressed in this show are the views of the host and not necessarily that of WTRW, 94.3 The Talker, or the Bold Gold Media Group.
The following presentation is brought to you by the host of the program, who is solely responsible for its content.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities offered through Lee Baldwin & Company, LLC. Member FINRA SIPC.
Portions transcribed.
Good Saturday morning and welcome to the Your Financial Future program here on 94.3 FM The Talker. My name is Nick Colarossi of NJC Investments, and I'm thrilled that you've chosen to join us once again as we open up today's doors to the College of Financial Knowledge. This morning's broadcast originates from the luxurious corner office studio at the beautiful Bold Gold Radio Complex, located high atop the sunny fields of the West Mountain of Scranton, Pennsylvania, the Electric City. Our goal as we open up those college doors is to help you to become a better long-term investor. Helping me out this morning to get to that goal is our producer extraordinaire, sits across the massive soundboard here at the beautiful Bold Gold Radio Complex, and that is Mr. D.C. Taylor. Good morning, D.C.
Good morning, Nick. Yeah, opening up those doors and looking through the doors down the hallowed hallways.
I'm making you the adjunct professor this morning. Okay. How's that?
All right, very good.
Before we get started, D.C., it looks pretty nice to me outside the big picture window here at the beautiful corner office studio. What's it look like to you?
Not too bad. We're having a partly sunny weekend today and tomorrow, and also a chance of maybe a shower or a thunderstorm here and there, and highs near 80. So it's
I'm not complaining. A little less humid this weekend, and that's nice.
Yes, very good.
We'll look forward to that. Well, before we get started, let me remind everyone we have a podcast platform. If you ever miss our regular broadcast, you can go to our podcast platform, or you can find our replays right on our website at njcinvestments.com. We also have the Radio Bold app that DC Taylor will tell you quickly how to get if you want to listen and you're traveling outside of the terrestrial listening area. How do you do that, DC?
Yeah, you can get the live, whatever's going on here live. You can listen right on your phone. Radio Bold is the name of the app, and you can download it for free. It just takes a second, and it's easy to use. It's not too cluttered up with all sorts of stuff. It's just got all the fine Radio Bold stations, including 94.3 The Talker, where you can listen to the live stream of this show if you're out of town.
Absolutely. It's easy, it is free, and it reaches across the entire planet.
That's right. You don't have to break with your Saturday morning listening tradition.
All right. Well, thank you, DC. We have a lot of ground to cover today. You've tuned in, I believe, to the right place this morning, DC. If you're looking to get ready for next week in the investment world, we have a lot of ground to cover. We had the inflation numbers come in this past week. We're going to talk about that. DC Taylor, just quickly ask you think we have any inflation going on?
I think we do.
I think we do, too. We'll tell you about that and how that might affect your portfolios. I am also going to present to you an income stream idea, and we use variations of this at NJC Investments for certain of our clients. And this particular one, DC, I find it, my opinion is it's towards the lower risk of the risk spectrum, but it generates about a 5% return. Anyway, it has over the last 10 years, and DC right away is going to tell me
that past performance is not a guarantee of future results.
No, it's not, but I'll tell you how it's done so far in 2021 and how you might get an income stream from your investments. We also have the Motley Fool with their latest top 5 picks. These were a surprise. A couple in here surprised me. And also, we always talk about having your shopping list ready in these volatile markets. Now, we hit new record highs, DC, this past week on the S&P 500. And a lot of people worried, okay, it can only go down from here, right? We don't know that.
No.
We don't know. But generally, be prepared on any given year to have a 10% correction. It usually does happen at least once a year, sometimes more than that. And if that were to happen, you want to have your shopping list ready to buy quality investments if you're a long-term investor. I have an article that says, here are the 7 best growth stocks to buy during the next dip. So we'll see.
Okay.
I think you'll be surprised at some of those names as well as we get there. But let's start here today with the inflation number, DC. The inflation number came in at about 5% on the CPI. That's the highest amount of inflation that we have seen in our economy since 2008.
Yeah.
It's a long time back, right?
Yeah.
And it originally shook the markets. I watched the stock market. This came at 8:30 a.m., I believe, on Thursday. The markets have originally sold off on that. And then by the end of the day, they set a record high. Can you just take a moment to explain that to everyone? Because I certainly can't.
No, I can't. Not even a little bit.
I can tell you that the analysts throughout the day didn't seem to be, a lot of the people I listened to. I'm going to give you some of the quotes from them. They didn't seem to be too upset with the number. I'm looking at it saying this is bad. This is bad inflation. And you're seeing it. You're seeing it in gas prices. You're seeing it in food prices. Those are the easy ones, lumber and so forth. But the debate goes on. The Federal Reserve and half of the economists out there are telling us this is transitory. This inflation number. Yes, we are seeing inflation, but it will come down as the economy opens up. And then we have the other side of it with a lot of people saying, no, this is the beginning of a bigger inflation cycle. And that could, if that continues, be trouble for the markets down the road. So we have to pay attention to this. But that 5% number was kind of brushed off by the market. So, the trend is still, in my opinion, to the upside in our markets, in the stock markets especially. And we shall see where we go from here. But I am going to give you just a couple inflation hedge ideas. And let me just tell you some of the people I heard last week talking about the inflation. Art Laffer is an economist. I think he won a Freedom Medal recently, and he was actually started under President Reagan. So he's been around a while. Yeah. You'll see him bouncing around on the business channels. Very, very, he had the famous Laffer curve, if you want to check out that information. He has a book out on that. And very, very, I follow him closely. He says, I am not worried about long-term inflation right now. He said, because gold would be running first and interest rates would be following, going higher. He says neither of those are happening. Now, gold did rally a bit yesterday, I will say, but interest rates actually came down. The 10-year Treasury yield, we'll talk about in just a little bit, actually went down yesterday. Art Laffer is more worried about paying people not to work. And I think that's a problem, DC. Taylor. How many we need for hire, and how many people, we need workers, and
the advertisements are all over the place. The radio stations, the billboards, everything that people are looking for help.
There's people earning, $30,000, $40,000, $50,000 a year to stay home and do nothing. And that's, I don't know, how you get around that. I think there has to be more incentive to work. Your thoughts?
And the thing is, the more people stay out of work, then there aren't people to run the businesses, work the businesses, help the customers, and then they have to try to bring people in for, where they're going to have to pay $30, $40, $50 an hour or whatever. Yeah. And so I just say,
and that'll cause wage inflation.
Yeah, we need stuff. Please come back to work.
Come back to work. It's good to work.
Yes,
it's good to work. Anyway, another market maven out there that I caught, Shah Galani, a very well-known astute investor. He said markets are in a calm position, almost Goldilocks. Inflation doesn't seem to be a problem right now. Now I'm looking at 5% inflation, the most inflation since 2008. I don't know. Well, he's on TV. I'm not. So, right. We'll see. Right. He says Treasury yields are going down, and they are. The markets can go calmly higher, and all of the big cap tech stocks are a buy right now. So he likes the FANG type names because they've lagged the markets, right? So it would be Facebook, Apple, Amazon, Netflix, Google, those type names. I know he likes Microsoft and things like that. So that's what he's doing. And I thought I'd finish up here with Kathy Wood of the ARK Funds. We've covered her so much over the past year, and her take on inflation. She says, I have no fear of inflation. Of course, Kathy Wood had 5 ETFs all over 100% return in 2020. Yeah. That's CATHIE. Wood is WOOD. Look her up if you haven't heard us cover her in the past. Just a phenomenal return in 2020. And of course, that means in 2021, and when we say past performance is no guarantee, it's certain because she's down this year. Yeah. I'll give you the symbol in just a moment of her flagship fund and the holdings in it and where it stands year to date. So stay with me for that. But Kathy Wood says she has no fear of inflation. And she believes, this is her opinion, she believes her portfolio will triple in 5 years. How about that, DC Taylor? That takes guts.
That's bold.
That is bold. She's a bold investor. Yeah. She thinks outside the box. She says growth in technology and innovation is what is going to carry us forward, and that is going to take care of any inflation that will come in because the technology companies will outgrow the inflation is kind of what she's saying. That will bring down inflation. Okay. So Kathy Wood, her flagship fund is the ARK Innovation Fund, and that is ARKK. This is an ETF of, outside the box kind of thinking, ARKK. And let me just give you where she is year to date. Well, the market is up about, well, we'll find out in just a little bit, but much more than this. She is actually negative 7.3% year to date on her funds. So a little disappointing start or half year for Kathy Wood. Her top holdings in ARKK are Tesla, Teladoc, Roku, Square, Shopify, Zillow, Zoom, Spotify, Baidu, and Exact Sciences. So that are the holdings, down 7% year to date. She thinks her fund triples in the next 5 years, her opinion. Okay. We'll be here hopefully to give you the scorecard along the way, right, TC Taylor?
All right, we'll mark the tape here and come back to it in 5 years and see what happens.
That is Kathy Wood. So that is some of the opinions from the street right now on inflation. I think it's starting to get a little bit to the upside. That has me a little concerned. These analysts don't seem to be. Let me go back to just for 1 second. Let me go back to Art Laffer because he's the statesman of the group, right? I think he's 80 years old now. He's been around a while. Mm-hmm. He said, "Yeah, I don't think it's going to be a problem." But I did put some inflation hedges into my personal portfolio. And I think that that's a good idea. We've been talking about inflation hedges. We've been talking about gold. We've been talking about commodities in general. We've been talking a little bit about real estate. We've been talking about tips funds, floating rate funds. DC Taylor, let's finish up with some ideas, the kinds of things that Art Laffer is speaking about in hedging, putting a little bit of hedging into your portfolios in case we get spiked inflation. Mm-hmm. Again, there's a debate about it, but it's not a bad idea to start looking and start preparing just in case, as Art Laffer is. Now, these are two ideas. We do use these for certain of our clients at NJC Investments, but there are 1,000 different ideas out there. So please do your own homework, work with your own financial advisor in seeing what is suitable for your portfolio. If we can help you out in any way, of course, you can always call us at NJC Investments, bounce it off us at 570-586-5030. But let me give you a couple ideas here, DC, to close out the first segment. And one here is in real estate, and we do own this again for certain of our clients. We own each of these. iShares Real Estate Trust. This is an ETF. And to give you an idea of the types of things it holds, it's an all real estate portfolio. American Tower and Crown Castle, those are the tower companies for 5G and cell phones in general. There's Prologis in here, Equinix, and Public Storage, to name just the top 5. IYR is the symbol. It's trading at $104. It's been as high as $105.22. The low was $75.34. It has a 2.5% dividend yield. Hard to find a dividend yield these days, especially if you're looking for it in money market or the banks or CDs, DC. You'll never find anything close to that, right?
Yeah.
Of course, there was risk involved here, but over the last month, IYR is up 7%. You can see that real estate is working right now. That is a known hedge against the possibility of inflation. It's up 22% year-to-date IYR. Let me give you a commodities one we've covered a few times on the program. This is the BlackRock Commodities Strategy Trust. This is a closed-end fund, trades on the exchanges with the symbol of BCX. BCX trading right around $10 a share, $10.22 the 52-week high, $5.35 the 52-week low. This has a dividend yield of 4.74%. That's your annual yield. That comes to you, though, on a monthly payout, and you can reinvest that. You can take it in the form of a cash or a check as well. Not too bad.
Okay.
And that is BCX, up 1% over the last month, but up 36% year to date. Look what's going on in the commodity sectors. BCX is diversified across all commodities, and you can tell what's going on with, you're seeing lumber, you're seeing copper, you're seeing... The last one I heard, DC, is there's a shortage of paint.
Really?
Yeah.
Paint.
Everything.
Okay.
Right? So all the commodities so far in 2021, we don't know going forward, but year to date, this fund up 36% year to date on BCX. So there's some hedge ideas as a tip of the hat to Mr. Art Laffer telling us we should be considering possibly some hedge ideas just in case that inflation gets out of control. It's a debate, DC Taylor. Which way do you come down? Do you think it's going to slow down or speed up?
Speed up.
Yeah, I kind of do too. I'm a little we're getting ready just in case.
Yes.
I hope you and I are wrong.
Right.
How's that?
Okay.
All right, let's take our first break right here, DC, but don't go anywhere, because when we come back, we're going to start the second segment with that income idea, monthly income idea. A lot of people saying, how can I get some money? How can I get some income from my assets? I have money sitting at the bank, or I have money sitting in a CD making nothing. We'll share that with you, as well as the top 5 picks from the Motley Fool and some ideas for your shopping list. The 7 best growth stocks, at least according to one analyst, to buy during the next dip. You don't want to miss any of that.
No, of course not.
Well, before we go to break, DC, let's thank our friends at Seidel's Restaurant in North Scranton for sponsoring this portion of our program. It's getting too nice outside to be cooped up in the kitchen, DC.
Right.
Get the family together. This is a great Italian-American bistro right here in our own backyard. Great menu, great nightly specials. You'll have a great time in a welcoming atmosphere. Do yourself a favor. Pick up the phone and get your reservations to Seidel's Restaurant. I promise you, you will not be disappointed. Your financial future back after this brief message. We hope you stay with us.
If you're searching for a special dining experience, Seidel's Restaurant is your home for great taste. Seidel's Restaurant is one of Scranton's elite fine dining establishments, specializing in Italian-American contemporary cuisines. At Seidel's, generous size entrees are prepared with only the highest quality ingredients. So whether you're having a meal for business or pleasure, it's sure to leave a lasting impression. Seidel's Restaurant has mouth-watering Italian-American contemporary cooking with a delightful ambiance. At Seidel's, you are certain to find unique specials for what you're craving. If you can't find an entree off their elaborate menu, just ask the chef. he can create an off-the-menu meal for you. At Siddell's, the owner is also the chef. Siddell's is located on the corner of Main Avenue and Tripp Street in North Scranton. They are now accepting holiday party reservations and on- and off-site holiday catering. 343-6544. That's 343-6544. Make it special. Make it Siddell's.
Welcome back to the Your Financial Future program on 94.3 FM The Talker. My name is Nick Colarossi of NJC Investments, helped along, of course, by Mr. D.C. Taylor of Bold Gold Radio fame.
Yes.
On this beautiful Saturday, D.C. Taylor, you've drawn up for us.
We've got a pretty fine weekend ahead of us. Maybe a thunderstorm here and there, but don't let that discourage you.
Absolutely not. June 12th already. How about that?
Here we are, June 12th. I call it the middle of the month.
Almost summer.
All right.
Almost
Yeah.
summer.
Yeah. Next summer, I think summer starts next Saturday, I think.
And this is good.
All right.
This is good.
Yeah.
So I want to thank you for getting this. You do this every week for us, and I appreciate it every week. You dash down the hall, come running back somehow in between that short break that we have. And brings us back each a piping hot cup of coffee without, mind you, spilling one drop. And what is it that we have today?
Well, going back, drawing on my history as a top 40 radio DJ, I call this the top 8 at 9. It's just a fancy way of saying the 8 o'clock coffee at 9 o'clock in the morning.
8 o'clock coffee at 9 o'clock. Is it the dark Italian roast?
It's the dark Italian roast.
Of course it is. I can smell the aroma. It hits you right in the face. It's a wonderful cup of coffee, and I thank you for that. And I urge everyone, hey, why don't you grab a cup of whatever it is that gets your early Saturday morning started? Sit back and enjoy the rest of our program. TC, before I get to that money stream idea that I've promised, I want to go over a quick statistic I came across from BTN Research, because this is a question on all investors' minds, and we hear it all the time at NJC Investments. How much money do I need to retire?
It depends.
Absolutely, it depends. It depends on your lifestyle. It depends on a lot of factors, where you're living,
right,
your spending habits, things of that nature. But I thought I'd give you a quick statistic for funding a retirement from BTN Research. And it starts off by saying over the past 25 years, the S&P 500 has had an average annual return of 9.6%. That's the return plus the dividends, the total return, 9.6%. So in order to have a 20-year payout of $100,000 per year, some people don't need $100,000 per year. Some people might need more. This is just an example, right?
Right.
But if you wanted to have a $100,000 per year, that's a gross distribution before taxes right now, assuming that the S&P, there's a lot of assumptions here, DC.
Sure.
Assuming the S&P continues on that 9.6% return and you keep your assets in the S&P, you would need $877,760, $877,760 in a pre-tax account to sustain that 20-year payout of $100,000 per year, again, at a 9.6% rate of return. So it doesn't take into account taxes. It doesn't take into account market fluctuations or anything. It gives you an idea,
right,
if you're looking at that number.
And it doesn't take into account if you happen to live, if you're one of those folks that lives to be 105, 110.
That's true. That is true. And I think that lump sum 877 is higher than most people have average retirement, so you need to build your retirement accounts. Right?
Yeah.
When that's what we're there for at NJC Investments, dollar cost average, never too late to start. You want to get started, give us a call at NJC Investments. We will show you how. And let me give you an example right here, DC, of some of the things we do at NJC Investments. Let's turn over now to that income producing idea. We have done this before. I have updated it for the numbers through this past Thursday. So it has 2021 numbers in it right now. And this is, again, not a recommendation from me to you to go out and do this exact thing, because I don't know your particular circumstances or your suitability or your needs. This is just one example. There are many out there. There are many variations of this example that I'm going to share with you, but it will give you an idea of how to beat the banks, how to get an income stream that's better than where the CD market is, certainly better than where the money markets are right now, which are, where are they at, DC? 0 point?
Are they still 0 point nothing?
0 point nothing, just about there anyway. So let's take a look at a hypothetical illustration, and DC Taylor is going to chime in whenever we give you a projection. What we do is we go back over the last so many years, and this one happens to be 10, and we will show you the exact numbers of these investments from the last 10 years. But since DC is not a magician, and I am certainly not either, we have to tell you that
past performance is no guarantee of future results.
We cannot predict the future. Nobody can, and that's true, but the best we have is to go back and see what it did in the last 10 years, so that's how we project out. So what I do in this portfolio, DC, is I take the largest bond fund, mutual bond fund out there. It is from PIMCO. PIMCO, I think, the best bond managers. You've heard me say that time and time again. I stand by that. That's my opinion. PIMCO is the name of the company. Their flagship fund right now is the world's largest bond mutual fund. It is the PIMCO Income Fund. In this example, I am going to share with you the A shares. The symbol is PONAX. PONAX. Now, this fund, it's diversified. They can short the treasury market. They can put hedges in as far as floating rate funds, but it is pretty much a plain vanilla bond fund. They are smart at PIMCO. Yes, they see the possibility for interest rates going up. Of course, they have to invest in bonds of some sort. So if rates go up dramatically, that is a risk to the short-term performance. The long-term average performance on this fund, right around 5% per year, PONAX. How's it doing so far in 2021? Not too great. It's up 0.25%, but this is a relatively lower risk bond fund, my opinion. It is a 4-star Morningstar rating, which is a buy rating. Morningstar rates from 1 to 5, 5 being the best, 4 the second best, a buy rating. And this has approximately a 3.7% dividend. That's your annual yield. It is paid out to you monthly. You can reinvest that. You can also take it out in cash. I couple that with the PIMCO Income Strategy Fund. This is a higher risk, higher reward fund. It does hold floating rate instruments in it. This would be considered a high yield fund. It has an 8.79% current dividend, doing much better. Higher yield funds are protected a little bit better in times of inflation. This fund is up 9.9% year to date, also a 4-star Morningstar fund. What I do in this portfolio, DC, again, just for illustration purposes, I start with a $100,000 portfolio. So very simply, $75,000 into the flagship fund, $25,000 into the higher yield fund. Again, symbol on that, PFN. And by doing that, DC Taylor, year to date in 2021 through Thursday, this portfolio up a respectable 4.1%.
Okay.
If you take it back 10 years, going back all the way to May of 2011, this portfolio average annual return 7.3% per year. It only had one down year. That actually was in 2011. The portfolio was down 2.7%, but the average annual return 7.3%. And you can, as I said, you can do this as a dollar cost averaging program, DC, where you reinvest your monthly dividends. That's like buying each month for you.
Yeah.
or you can take the money out in cash. We have clients that do either. If you would like me to show you this portfolio, if you would like me to project a portfolio using your time frame, your dollars to invest, I'd be happy to do that absolutely free of charge or obligation. Give us a call at NJC Investments, 570-586-5030, and I can also get you out all the deep details on each of these investments. DC, I do that portfolio illustration because I'm getting so many questions from clients about raising a money stream, a current income stream, because rates are so low. I've heard from even my own clients that had money at the bank I didn't know about because they're stock investors or they're fund investors over here, but they said, well, I have money that I don't want to put into the markets. I want to, keep it a little bit safer. Yeah. Now, bonds do have risk, no doubt about it. They will go up and down a bit. Nothing like the volatility of the stock market over time. But there is certainly risk involved. And the more that you add in things like the higher yield fund, the more risk that you take. So make sure you know about that. But there's a lot of people looking. It's hard to find yield these days. Yeah. So there's an idea for you. Okay. Thanks again for tuning in to Your Financial Future this morning on 94.3 FM The Talker with Nick Colarossi of NJC Investments. Thanks for allowing me to be the soundtrack for your early Saturday mornings. DC, it is time to turn to my favorite part of the program where we catch you up on where we stand year to date in our markets. But before we do that, you know that I always like to give you a hot tip on some of the best investments that you can ever make. That is investing in your family, investing in yourself, and investing in your own community. A couple fun ones here, DC. Okay. Coming up on this coming Wednesday at Naog Park in Scranton. I like this because it is an absolutely free concert. Tom Hamilton and his Jazz Sextet will be playing a free concert this Wednesday at 6 p.m. Naog Park, of course, at 500 Arthur Avenue in Scranton. Great to see the free concerts back outside, right? Like that. Yeah. Not too bad. I got one other quick one. And let's go back to the Circle Drive-In Theater. I think they're doing a great job up there, DC. They have, get this, they have a concert coming in. They just had the Blue Oyster Cult and their cowbells, right? Right. And now, coming up on June 17th at 8 p.m., the Allman Betts bands, all the music of the Allman Brothers. Yeah, I think some of the people that played in the band, but I think the sons of each, right? Right. Is that in Allman's Betts? Yeah, and that will be again this coming June 17th at 8 p.m. And the tickets range between $159 and $239. You'll have to check out. It doesn't explain that, but you can go to their Facebook page at Circle Drive-In Theater, or give them a call at 570-489-5731. The way I understand that these work, DC, is you kind of load up the SUV in the pickup truck, right?
Yeah,
and they
it's a carload of people.
Right, you get a clown full of right?
Car full of clowns.
That's it. Car full of clowns, and get up there and enjoy the Allman Betts Band. June 17th is what? That's Thursday?
Yes, Thursday.
Thursday, June 17th. All right. What do you have for us, DC?
I got a few small events here. Well, small, but they're right in your community, right in your neighborhood, and really helps your friends and neighbors when they got these things going on. They really could use your support. Goldsboro Fire Company is having a corn and clam bake today, 4 till 7 at the Hose House on Main Street. You can take it home.
Hose House.
The Hose House.
All right.
That's what it's there. Jude, my coworker, writes these things. He likes that term, Hose House. On Main Street, Goldsboro, take it home, or you can eat it there. They'll have outdoor seating. Goldsboro Fire Company, corn and clam bake. Before that, Boy Scout Troop 34 this morning, they're having a flag retirement ceremony this morning starting at 11. This is at the fire department, 4th Avenue in Jessup. Over 5,000 flags that were replaced on veterans' graves will be given the proper retirement. And if you have your own flags that are, maybe kind of tattered and worn out, bring them for a proper retirement. And food and drinks will be available. So that is 4th Avenue in Jessup at the firehouse there today, starting at 11. And one more Jefferson Township, Fireman's Carnival. Today and tomorrow, rides and food and some music and games and all the good fun stuff on the fire company grounds in Mount Cobb. And that opens 2 o'clock this afternoon. So plenty of great things to take the family to.
Absolutely, DC. You did your homework this weekend. That's
nice.
Terrific. And especially, God bless the Boy Scouts for carrying on that tradition.
Oh,
It's good that somebody still does that and has respect for our flag.
Absolutely.
All right. DC, shall we carry on with the up-to-date, or shall we take a quick break?
We're 15 minutes. You can take a break.
Let's take a break right here. When we come back, we are going to catch you up on where we stand year-to-date in our markets. Don't forget, we also have the top picks from the Motley Fool, the updated picks, and also some ideas for your stock shopping list. Don't go anywhere. But before we go to this break, let me remind you, this is a great time to take that short country drive out to see my friends at Montrose Motors, DC, Taylor.
Oh, yeah.
This is a great time of the year to be looking at those new cars, those pre-owned vehicles as well. Montrose Motors is your place to go, a family-friendly dealership, like the old time, DC.
I like that.
No pressure.
Nice.
The coffee's on. Sit down, have a coffee.
All right.
They will make you, I promise you, they will make you that great deal on your next vehicle. That's Montrose Motors in beautiful Montrose, Pennsylvania. Don't go anywhere. Your financial future back after these brief messages.
Looking for a dealership where you'll feel right at home the minute you walk into the showroom? This describes Montrose Motors to a T. You know, that Ford dealership in the great little town of Montrose, Pennsylvania? Not only do they have a great selection of new Ford vehicles in stock, they also have an equal amount of quality pre-owned cars, SUVs, and trucks. It's just a short country drive to the no-hassle Ford dealer Montrose Motors on Grow Avenue. Ask for Andy Bennett or Doug Thomas. These guys really have never met a stranger. You'll end up friends.
Nestled in the rolling hills of beautiful Clarks Green, Pennsylvania, you will find NJC Investments, a capable small-town firm with local values working right here for the citizens of our own community. Whether it's retirement planning, college planning, or just building up that long-term nest egg, the advisors at NJC Investments have decades of experience helping your neighbors achieve their goals. Why don't you get to know NJC Investments too? You can reach us at 570-586-5030. That's 570-586-5030. And we welcome you to join us weekly as we broadcast the Your Financial Future program on 94.3 FM The Talker, Saturdays at 9 a.m. NJC Investments, helping to take the mystery out of your financial future.
Securities offered through Lee Baldwin Company, LLC. Member FINRA SIPC.
Welcome back to the Your Financial Future program with Nick Colarossi from NJC Investments on 94.3 FM, The Talker. And I'm DC Taylor, the producer and the sidekick of this whole thing. Hi, good morning, Nick.
Good morning, DC Taylor. Not only the sidekick for me, but for all the other great programs on 94.3 FM, The Talker on Saturdays and Sundays. Mr. DC is the producer extraordinaire of them all, and that's why it's so much information you can get here on the weekends, DC Taylor.
Right.
We call this station the education station for the entire nation. That is correct. Oh, thank you, DC. It is time to get back to finance. Here is where we stand year to date in our markets as of Saturday, June 12th, 2021. Dow Jones Industrial Average up about 12.5%, but it has been eclipsed by the S&P 500, which is now up about 12.7% year to date. They're doing well. And look at this, DC. The NASDAQ now up just shy of 9%, catching up a bit.
Nice.
I heard a couple. We heard from Shah Gilani earlier saying he thinks technology, the big cap techs could all be bought here. Kathy Wood said it's time to rotate. She thinks a rotation is coming back into technology. We'll see how that goes, but the NASDAQ catching up a bit as well. And the price of a barrel of oil, unfortunately, has hit $70 a barrel, and I hear it's going to $100 according to several analysts. We'll see if there's experts on this, DC.
Okay.
We'll see. But it is
experting.
Yeah, up to $70 a barrel. We're feeling a little bit of the pain at the pump.
Yeah.
But the 10-year Treasury yield in this is key. That yield, which bumped up about a month ago to 1.74, is all the way back down to 1.45. That is showing that the markets are not, at least for this very moment, not concerned about inflation. Keep an eye on that 10-year Treasury yield. If it starts to spike up, that's when I would get more cautious about inflation. I'm also keeping a close eye on the price of gold. Gold about flat on the year, DC. That is typically your best tip-off that there is going to be inflation if you start to see the price of gold jumping way up. Hasn't happened yet, about right at the zero mark year to date. Let me just finish up, DC Taylor, with the forward PE. I find this interesting because this is the first time that I've seen this in a long time. The forward PE on the Dow is now 20.4%. Usually it's in the 18% range. Everybody's saying the market's way overvalued. This would not suggest to me the market being way overvalued, but look at this. A year ago, the forward PE was 24.3%. We are coming down as we're seeing earnings rise. We are coming down on that PE, which is a good sign to me. 20.4% versus 24% a year ago. Very similar on the S&P, trading at 22 times forward earnings. It was 24 times forward earnings a year ago. And do you know, over the last year, the markets are up approximately 90%.
Oh, wow.
And with that, the PEs are coming down. To me, that is a good long-term sign for our markets. Let's see how that works out.
All right. And as you can see, I've got a blinding light right now. The studio hotline is ringing. You know what that means, right?
Is it time for Mitchell's mailbag already?
Yes, it is time for Mitchell's mailbag here on the Your Financial Future program, the feature of the program where we answer your questions about finance and sometimes even barbecue. But you can get your questions in at just send an email to nick@njcinvestments.com. That's nick@njcinvestments.com and put in the subject line Mitchell's mailbag. And the reason we call it that is because the guy who handles all these things is on the phone with us right now. Mitchell Dimitrick, our always intern. Mitchell, how are you?
DC, I'm doing well, Nick. It's a beautiful Saturday morning.
Yes, time for another fine weekend upon us. So make sure you get out there and enjoy it. And I think we're ready for some questions here. Mitchell, you got questions for us?
I do. I'm ready to go.
All right, well, let's go. Question number one.
Alrighty. Question number one comes from Rick from Pittston. Rick asks, what is the difference between a mutual fund and an exchange-traded fund? Which do you think is better for my non-retirement account?
Well, thanks for listening in, Pittston, Rick, and that's a good question. What is the difference between a mutual fund and an ETF, an exchange-traded fund, DC Taylor?
Okay.
They're very similar. They're baskets. It could be stocks. It could be bonds. It could be anything. It's a basket instead of buying one. Mm-hmm. But in the case of a mutual fund, when you go to buy it, they create new shares for you. In the case of an exchange-traded fund, they do not. You buy and sell on the exchanges. So the shares are already out there. And one thing that's interesting here, Rick says, for my non-retirement accounts. See, I like mutual funds in one respect that you can dollar cost average into them. If you're using C shares, you can usually do that for free as far as sales charges. In an ETF, sometimes there are commission charges if you're not in a wrap fee account that you would pay to do it each time. But Rick says, what do you think is better for my non-retirement accounts? I think an ETF is better for your non-retirement accounts because mutual funds, when the course of a year, if they have gains, DC Taylor, they distribute those gains to you, and that becomes a taxable event.
Yeah.
An ETF generally does not do that. So when a mutual fund gives you gains, Let's say you had $10,000 in your account and they gave you $2,000 worth of gains. They lower the price of the fund to correspond with that $2,000. So you have a $2,000 taxable capital gain, but you have the same value because they've lowered the share price. So in that case, it would be better to have the mutual fund in an IRA where that won't matter. If it's a non-retirement account, I think it might be better for you to look at an ETF, all things else considered equal.
All right. Well, let's get right over to question number 2 in Mitchell's mailbag. Go ahead, Mitchell.
Alrighty, question number 2 comes from Barb in Honesdale. Barb asks, do you think there will be a correction in our markets this year, and how can I prepare for it?
Barb, thanks for listening in Honesdale. A lot of listeners in Honesdale, PA, DC Taylor.
Yeah.
And Barb wants to know, do you think there'll be a correction in the markets? DC Taylor, do you think that there'll be a correction in our markets this year? What would you say?
I would tell you, maybe.
That you're absolutely right. Barb,
Okay.
There is no way to know. Generally, we do have at least one 10% correction, sometimes more than that. So I'd be surprised if there weren't, but you never know. And you can't really plan for it or predict it. But there is one thing I think that you can do to prepare for it. And that would be to have your shopping list ready of those quality investments that you wanted to own that you think you might have missed. They may come back down into a buying range if there is a pullback, a regular general market correction, and that may be the time to execute that. And if you stay tuned, in just a few minutes, we will have someone's idea on how to put that shopping list together.
All right. Well, let's get to one more question in Mitchell's mailbag. Question number 3. Go ahead, Mitchell.
Alrighty, last but certainly not least, question number 3 comes from Cheryl in Clark Summit. Cheryl asks, I have a 401k that I left with my last employer after I retired 5 years ago. I'm not happy with the returns, but I am not ready to take money out. Is there anything I can do before I start withdrawing money?
Well, Cheryl, thanks for listening in Clark Summit, Pennsylvania. Just a stone's throw, DC Taylor, from Clark's Green, Pennsylvania.
Oh, yeah.
I don't even really know where the line is. I don't think most people do. It's up. It's close. Right. Anyway, Cheryl asking about her 401k. A lot of people, when they leave their jobs, leave their 401ks behind.
Yeah.
And sometimes this happens if you're not paying attention to it. Now, most companies will let you do all the picking of the investments. And if you kind of forget about it, it might languish out there and not give you a good return because nobody's watching it. Right. Yeah. So there are a couple things you can do before you withdraw money from it, Cheryl. You can see if you can get in and see what the investment choices are and then kind of tailor it to your needs for the next 5 to 10 years, however long you're looking at before you start withdrawing your money. Generally, there's anywhere between 10 and 20 choices. Some have more, some have less, but there are ways to structure it right where it is to meet your current needs. Now, you can also, if the choices there aren't suitable and you want more choices, you can always roll your 401k, the ones that are left behind, into an IRA account, an individual retirement account, and then you can control it completely because it opens up the world of choices to you. You can have money market, you can have CDs, but you can also have individual stocks, ETFs, bonds, mutual funds, closed-end funds, anything that you really want. You would be able to put it together with a lot more choices. Now, to see which is suitable, whether leaving it there or rolling it into an IRA, work with a qualified financial advisor. If you need help, you can always reach out to us at NJC Investments at any time, 570-586-5030. We'd be happy to help you in any way that we can.
All right. Well, there you have it. Your questions answered on the Your Financial Future program inside this feature we call Mitchell's Mailbag. And please email your questions to nick@njcinvestments.com and put in the subject line Mitchell's Mailbag. That way we know who gets all those messages. We forward them all over to him, and Mitchell takes care of them all. So thank you for doing that again for us again this week. Mitchell Dimitrick, our always intern.
DC, Nick, thank you for having me on the show each and every Saturday morning.
All right, and we will talk to you next weekend.
All right, sounds good. Talk to you then.
That again, Mitchell Dimitrik, our always intern here on the program, does a great job. We're glad to have him, DC Taylor.
Absolutely.
And don't go anywhere. We're going to wind up this segment, but we'll be back with one more segment. We're going to talk about the top picks from the Motley Fool right now and the 7 best growth stocks to put on your shopping list and buy on the next dip, according to investorplace.com. Your financial future back after this brief message. Please stay with us.
Mr. Wrongway, it's Big Box Brokerage calling. The market's been falling. Maybe you should sell.
Well, get me out! Get me out!
Mr. Wrongway, the market's rebounding. It's going higher.
Well, get me in! Hurry up! Get me back in!
Mr. Wrongway, more bad news today.
What? Get me out, for goodness sake! Get me out!
Don't be Mr. Wrongway. Let us show you what we believe is the right way to invest. Trying to time the ups and downs of financial markets is nearly impossible. I'm Nick Colarossi, a certified retirement counselor and host of the program Your Financial Future, heard on 94.3 FM The Talker every Saturday morning at 9 a.m. At NJC Investments, we believe a solid investment plan paired with a consistent dollar cost averaging program can help you reach your long-term goals, like retirement and college planning. Call us today at 570-586-5030 or reach us directly through our website, njcinvestments.com. NJC Investments, helping to take the mystery out of your financial future.
Securities offered through Lee Baldwin Company, LLC. Member FINRA SIPC.
Thanks for staying with us here on The Talker. This is the Your Financial Future program with Nick Colarossi of NJC Investments and Mr. DC Taylor, of course, of Bold Gold Radio fame. Don't forget to check out DC Taylor weeknights on our sister station 105-1035 The River, a great classic rock program with lots of wit and wisdom.
Thank you. Appreciate you tuning in.
Absolutely. Everybody should tune in there, DC.
Thank you.
Great music.
Yes.
All right. And a wonderful host.
Thank you.
Yeah, okay. Well, DC, we have 2 things to cover to finish up our program today. Let's start with the Motley Fool, the stock advisor. Motley Fool, there's a service, there's a free side, there's a premium side. Check them out on your own. I'm just going to skim this article quickly. motleyfool.com on the internet. Some good ideas, DC. We try to get ideas from everywhere. Right?
Yeah, good
and
idea.
Nobody is right all the time. There are no true experts out there, just some that guess better than others more often, right?
Right.
All right. So this past week, June 10th, Motley Fool came out with their updated top 5 picks. These are not recommendations from me. I will share with you where we hold some of the shares for our clients at NJC Investments, but I'm just sharing this with you for informational purposes. And if you have an interest in any of the deep details on these companies, we can get that to you free of charge so you can do your own homework, your own due diligence. Let's get right to them, DC. This is from Team Tom, and he gives us his 5 updated picks. I'll give those symbols to you quickly. CrowdStrike, CRWD. Lemonade, LMND, Square is SQ, Upstart, UPST, and Zoom, ZM. Now, before we get into the reasons, DC Taylor, they always say these 5 should be a part of at least 15 stocks in a balanced portfolio. Never overweight. That is their idea, and I think that's a wise idea.
Sure.
From the Fool.
Yes.
All right. Let's talk about Zoom real quick. We all know what that is, especially during the pandemic with all the Zoom meetings. ZM is your symbol, up $14 at one point on Friday, DC Taylor, trading at about $360 right now. And Zoom, they have more than $4 billion in cash and marketable securities. They have generated $454 million in free cash flow in the last quarter. This is all because of the pandemic shutdowns, of course, but they expect them to do well after the pandemic shutdowns as we open up. They have more than 497,000 business customers with more than 10 employees, and they remain profitable. So the symbol there is Zoom. Upstart. This is a new one for Tom, I believe. And Upstart symbol is UPST. I started doing due diligence on this a few weeks back, DC, when a client brought it to my attention. We do not currently own Upstart, but we do currently own Zoom for some of our clients at NJC Investments. Upstart is a kind of a AI-powered banking service where they have the different tools they use to help people get credit and get loans and determine risk of a borrower and the risk of default and things of that nature by artificial intelligence. It's all heading that way, DC Taylor.
All right.
UPST right now trading at about $146. Total revenue increased 42% year over year, and they originated more than 300,000 loans in that time period. Have you heard of them before?
No, I've never heard of that.
300,000 loans.
Wow.
That's up and coming.
All right.
Lemonade is next, the insurance company. We have covered this before. This is an artificial intelligence powered insurance company. LMND trading at about just over $100 on Friday. And next up on the list, these are 5 buys from Tom at the Motley Fool. Just skimming the surface here, not recommendations from us at NJC Investments. These are ideas from the Motley Fool. CrowdStrike is next, and we do own some CrowdStrike for certain clients at NJC Investments. CRWD, this is the cybersecurity company, big in the news recently, right?
Right.
They expect the governments and companies they'll have to pay out over $6 trillion with a T dollars in 2021. So cybersecurity firms may be a big business going forward. And this is CRWD trading at $229. They're only up 8% year to date, but they're up 17% in the last month since the cybercrime. So they were negative year to date, but CRWD on track now, seemingly. One to go, DC, on this list of 5 top buys right now from Tom at the Motley Fool, and it is Square SQ trading at about $221, up only 1.4% year to date. Trailing the market, Square's most recent quarter gross profits rose 79%. And this is the online payment system. It's kind of like a PayPal and in that range. They have the ability to also trade Bitcoin on Square. So keep an eye on SQ, and those are Tom's. Well, DC Taylor, how much time did we leave to finish up with the 7 picks to buy on the next market tip?
You got a little less than 3 minutes here,
I better go fast. Yeah. I'll tell you what we're going to do. We'll give you the names quickly and the symbols. You can check this entire article out on your own. It's at investorplace.com by author Josh Inamoto from June 10th. I'll just skim the surface here, but I'll go quickly so you have the symbols. Then we'll pick it up next Saturday, DC Taylor, and give you the reasons behind these companies on this shopping list by Josh Inamoto. He says, if we have a correction, and he thinks it's more likely than not that we have at least a 10% pullback somewhere between now and the end of 2021, he says this is his shopping list of what he would be looking at to potentially purchase. Now, of course, his shopping list doesn't have to be your shopping list, and do your own homework, but have something ready and be prepared if stocks go on sale. As I always say, DC, this is the only business in the world when things go on sale, everybody doesn't want them, right? They're afraid.
Yeah.
Right? Buy when things are low and sell when things are high. Here we go. His list of his shopping list. We own 3 of the 7, I believe, DC. I'll point that out as we go. First on his list is a gold company, Ken Ross Gold. The symbol there is KGC. Next on his list, an energy company, Callan Petroleum Company. The symbol is CPE. We do own some Callan Petroleum for certain of our clients at NJC Investments. Next up is Amazon. I think we all know that, DC, and we certainly own some shares of Amazon at NJC Investments. AMZN is your symbol. How about the next one is Sony? SONY. Haven't heard that in a while.
Yeah, right.
Sony. We'll pick it up next week and tell you why Josh Inamoto likes this, but this is his shopping list. Things he would be looking to buy on dips. We've got 3 to go. Match Group is MTCH. DraftKings is DKNG. And the last one we also own for certain of our clients at NJC Investments. And a lot of activity in this stock recently, especially with the movement in electric vehicles. It is Ford. Ford.
Okay.
F,
All right.
F is the symbol for Ford. Again, the symbols here: Kinross, KGC, Callum Petroleum, CPE. Amazon is AMZN. Sony is SONY. Match Group MTCH. DraftKings is DKNG. And wrapping up with Ford symbol F. And with the wrap up there, I hear the music coming up, and we snuck them in. We'll start here next Saturday, DC Taylor.
All right.
Thank you for all your help this morning.
You're very welcome.
And let me remind everyone, there is never a bad time to make a good investment. If you have any questions on today's program, you know where to find us. 570-586-5030 or njcinvestments.com. Thank you so much for tuning in this morning on 94.3 FM The Talker. May God bless you, and may God bless America. Make it a great week. We'll see you next Saturday.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities offered through Lee Baldwin & Company, LLC. Member FINRA SIPC.